Hi, thank you for stopping by. My name is Jeanette, and I help empower women business owners to focus on building their legacy and doing the things that they love the most without the need to stress over their bookkeeping and accounting. So, today I wanted to talk about something very important. Cash flow, right? It's the lifeblood of your business. You need cash coming in, right? And you also your cash goes out because you need to pay to run your business operations. Well, one of the things that I find super helpful and that you will find also very helpful is knowing how to interpret your financials. So your financials are so valuable to you. And you might not know it and you might not use them in that way, but your financials really what they do is tell a story about your business. They say so much about you or your business, and you could ultimately use that information to help guide you in making strategic decisions to either make you more money, save you money, or just if finding a way to improve your business. So whenever you might notice that there could be some times that there is a bottleneck somewhere in your cash flow. You know that you're making the sales, but the money's not coming in as quickly as you'd like, and so you're still struggling to see that money hit your bank account. So today I wanted to bring you 4 different tips that I came up with in how to use your financial statements in order to help you with your cash flow. Okay, so the first thing that you want to do is, this is super obvious, but make sure you're invoicing as soon as possible. This information, you could find a lot of your, a lot, or you could find your information in your balance sheet, your accounts receivable, right? Once you send invoices to somebody, it goes onto your balance sheet as accounts receivable. So what you want to do is make sure that when you're looking at your financial statements, that you're taking a look at AR, accounts receivable, and make sure that you're not like if you're at a certain level of accounts receivable each month, make sure that's good. That's supposed to be that way. Not that there's something in your process that could be improved. So, for example, what you could do is run your AR aging reports, which tell you where who owes you money, how overdue their invoices are, and you start there and you start focusing to see where am I seeing these trends, where am I seeing that or my clients or my customers are taking some time to pay me. Now that's why I'm saying it's very important to invoice as soon as possible, especially if you're a recurring service or you provide a monthly service. If you are waiting until the 5th to send out an invoice and you're net 30, well, guess what? You're not going to start seeing money flowing on the 1st of the month. So you want to make sure that you're sending those invoices as soon as possible. And not only that, but reviewing your accounts receivable aging reports and making sure that you are staying on top of your collections, because sometimes people just forget to pay their bills. So it's up to you to remind your clients that their payment is past due and they should be remitting payment to you. If not already, they should be working on it. So that's tip number 1, is to make sure you're invoicing as soon as possible. Look at that balance sheet, look at your accounts receivable balances, and make sure that people don't owe you an outstanding amount and people aren't going past the 30 days or whatever your terms are. So tip number 2, and this sounds so simple, but I'll show you how this is so helpful. Use your income statement, right? Your income statement, as a reminder, is your revenues minus your expenses, right? So what you could do is look at it on a month by month and compare your monthly expenses. When you're looking at that, what you're doing is looking for trends. You want to see if there's anything that's particularly off. Is maybe there are going to be one-time off things, that's fine, but is there a certain account that's or a certain expense that's taking up a huge percent of your revenue month after month? And more importantly, ask yourself, is there anything that you could do to reduce or eliminate that cost. So what I recommend is to really take a deep look at it on a month-to-month basis and see if there's a way that you can negotiate with your vendors. As an example, let's say that you're paying your internet service provider $200 a month, right? You could easily call them up and see what promotions they have going on, or it might be years since you signed up and you are still getting charged at a higher level. So they might have better plans out there for you. So let's say you call and they're gonna give you the same speed of internet, everything, but for $50 less off, for 150 instead of the 200, right? So let's do the math. If you're paying $200 a year, that's 2,400, or I'm sorry, $200 a month, that's $2,400 a year. Now, if you get a $50 off of your monthly bill, that's $600. In 2 years, you would be saving half a year's worth of paying your service provider. So that just shows you the value of, really, even if it's those $50, if it's those $50, if you just look at it in that, it's just $50 a month. That's not, well, look at it in the long term. How much are you saving in the long term? Because it could be a lot of money. So that's my tip number 2, is to negotiate with your vendors. Use your income statement to your benefit. Look at where your money is going and see if there's anything you could do to lower those expenses or completely eliminate them, because you might be paying for something that you're not even using, or you don't need at that time. So my tip number 3 comes, I'm actually very inspired by one of my banking friends. She's a VP for one of the banks that I signed up for my business account, and I was telling her about my idea to create this video about cash flow, and just these light bulbs started going off in her head, and she was telling me, I'm not a banking professional. I'll definitely leave her information down in the description box if you want to reach out to her, because she's really awesome. But she was telling me that she's able to help business owners find ways to either consolidate their credit card debt, so they're not paying so much in interest, or getting a line of credit and that has a much lower interest rate. So you're not needing to pay as much. And over a 5-year term, like, how much money could you be saving if you weren't paying that much in interest? So that's a really great, useful tool, and I really recommend talking to a banking professional that's able to help you do something like that, and to show you the value of switching over and consolidating all your interest, because credit card interest rates are high. They're so high, and I cannot express how it just hurts my heart. It hurts my heart to see when all my clients' hard-earned money is going to interest. And there's just other ways that you could lower that rate, and you're not paying so much for just having that credit card and using that credit. So that's number 2, is consider consolidating any of your credit cards into either a new credit card with a lower interest rate, or a line of credit that will have a lower interest rate for sure. So that brings me to tip number 4, right? Going back to looking at your expenses, looking at your income statement. Okay, how many of you have signed up for subscriptions to services that you don't really use? Because I know I'm guilty of it. So I'll give you an example. When I first started my business, I wanted to do photography. I've been wanting to do photography for a very long time, but I really wanted to just be that photographer that's going to post these beautiful pictures on my Instagram and my Facebook and whatnot. And I bought a camera, and I was super motivated. So I got, what do photographers get? A Photoshop, right? So I signed up for Photoshop, and I used the crap out of it for a month-ish, maybe, but I haven't used it since, and I'm still paying for it. Now, that's a small example, because that's probably like $15 a month, maybe, what I've been paying. So, yeah, but again, per year, per for every, let's say, 5 years, if you have something, which does happen because I know I've done something dumb like that before, but just make sure you're looking through everything. Everything is subscription based nowadays. Whether it's your accounting software subscription based, your Microsoft Office and Adobe, and there's just a subscription for everything, and it works, right? It's great. And there might be tools that you use on a day to day basis, but if they're not, look at your income statement and see where, if you have a lot of things going to your subscription services, or a lot of your revenues are going, towards paying those. Ask yourself if you really realistically need it. And a lot of the times the subscription services will offer tiers. So it's not like you have to get, the highest tier, or you might be able to downgrade and save yourself a few bucks right there. All right, so those are my 4 tips. They're super simple. They aren't groundbreaking or anything like that, but they're things that we tend to put off to the side and we don't realize how much they're affecting us. So that's one of the reasons that reviewing your financials is such an important thing to do, because you want to be aware. You want to make sure that all your money that's going to anything for your business, it should bring some type of value back to you. If it's not bringing value to you, get rid of it. You don't need it. If you are paying too much for it, maybe there's alternative vendors that do the same or more, that could do it for a cheaper price. Then do that. Or like I said, call your vendor and see if maybe they're running promotions, or they'd be willing to work with you on lowering your monthly bills. And again, I can't stress it enough. Don't forget to send your invoices. Without that, people don't know that they need to pay you, and even if they know, they're not going to until they get those invoices. So make sure you're sending them on the first of the month, or as soon as you finish your work. Don't wait. Don't put it off to the side. Every day that you wait is a day longer that it's going to take for you to get paid. So make sure you're doing that. All right, guys, again, my name is Jeanette. I am the owner of Lotus FMS. It's a financial management service company for small business owners. I love working with women, and again, I love empowering them to do the things that they are so awesome and so great at doing without needing to stress over their bookkeeping or accounting. All right, talk to you next time.